guys, how are you? Abel Tejeda with the mortgage guys here. And if you're thinking of buying a house or even refinancing, the very first thing you need to do obviously is take hold of your credit score. The higher your score, the better rate you'll get, the better terms. So here are a couple of tips that I can offer you right now. I'm not obviously an expert, but I look at credit reports every single day. So I have a really good idea of how this works, and more than anything, how it works when it comes to mortgages and what affects your interest rates. So here are some tips for you. Number one, never pay off a collection. People think that by paying off collections, their score's going to go up, but it's quite the opposite. A lot of times those collections are dormant. So basically, they're just sitting there. And when you pay it off, what it does is it reactivates that account. So instead of helping your score, it ends up hurting it. Now, if you're going to pay off a collection, make sure you agree with the collection company or whoever holds that collection to give you a deletion letter. So once again, never pay off a collection unless you get a deletion letter from the collection company. That way, not only will it show as paid off, it will completely disappear from your credit report, and that's how you get your score to go up. Now, don't go out. Number two, don't go out and start using credit cards. A lot of people, and this happens all the time, they start maxing out their credit cards to pull cash out to fund or get funds for down payment. That's a huge no-no. Make sure you don't max them out, because as you max out those credit cards, obviously your score will go down. So another thing, don't close credit cards. If you have accounts, and I hear this time after time, people are trying to work on your credit and they tell me, you know what, Abel, my credit must be good because not only did I pay off my accounts, I closed them. That's another huge no-no. Don't ever do that, because there are three main factors that affect your score. Number one is how long the account has been open. Number two, obviously your payment history, if you've been making your payments on time. And number three, the balance versus the limit. As a rule of thumb, you'll want to keep it at 30%. That's not always true, but just shoot for that number. So for example, if the account, or if the limit's $1,000, keep it below $300. A lot of times you might need to pay off even more than that. What we have is a credit simulator. Basically tells us if the client does this is what's going to happen to their score. So that is why when people are trying or thinking of buying a house, even if it's 6 months or a year out, it's always good to sit down and do a credit analysis. We can run it by our simulator, and it will tell us what actions you need to take in order to improve your score as much as possible. And like I said, the same with a refinance, especially if you're trying to refinance with a conventional loan. Conventional loans are extremely credit and FICO driven, so the higher the score, the better loan you will get. And the same goes with when you try to purchase. If you want to purchase with 3% down or 5% down, if you have your score at the 700s, you'll get a killer deal. But if your score's not there, don't worry. We can advise you on how to get there. If it's something more severe and above our pay grade, we have a couple of different really good collection companies that we can refer you to. So that's what sets us apart as well. With us, we're not like traditional banks. It's not black or white, meaning you qualify or you don't. What we do is, if you don't qualify with us, we actually set up a roadmap for you on actions you need to take so that you can qualify in the near future, may it be for a purchase or a refinance. If you have any questions, or if you need help with your credit or guidance, give me a call, 619-948-2996, or shoot me a message below. Talk to you guys soon, guys.